Good afternoon, everyone. This is Christian. Today is Friday, February the 5th, 2016. And yesterday, on February the 4th, I uploaded this photo or this chart on our Facebook page. And I did that because I wasn't going to make a video every day. I'm just making one at the end of every week. But sometimes intra-week, I'll see something and want to draw attention to it. So anybody who follows on Facebook, they'll get that information. So anyway, like I said, Thursday, on February the 4th, 2016, around 10:49 in the morning, intraday, I was watching the NASDAQ, and I noted that we were setting up a bull trap, right? And that's basically a situation where you would normally bounce after a sell-off, like you got here, bounce off this previous low, and you get that low bounce going on, and that draws a lot of bullish sentiment. People who are sitting out this sell-off looking for an opportunity to get long again would take this, and I was one of those people who did that, and looking for this move to then test the previous high, right? Well, as we started to move up here, I think it was last Friday, I mentioned that we had a nice move to the upside like this day here, and we liked that, but I thought it would keep going up, and instead we peaked on Monday, and that was somewhat odd to me. I started looking for the solution. Why are we peaking so early? And as I started looking around, I noted that the market is in a bull trap. What that's basically way to determine that is simply the angle of the rise, the way that it's climbing, and that angle is not sharp enough. It's a fake. It's a setup that's going to break down and have a massive move lower rather than higher. So all these bulls are getting in thinking we're going to go up here like I was, but in fact it never gets off the ground. It just kind of moves sideways, then rolls over, breaks through this little fake support, and then heads much lower. Basically, you look for this big leg to the downside to happen again out the other side. Now, this low point here, here, you can do it however you want. Basically, this is what a bullish move looks like. Look at that angle of that trend line. Now look at the angle of this trend line. Completely different, much more dangerous here when they're not as sloped as they should be. Also, if they're too sloped, that's a problem too. Here to here, you might draw it like this. That wouldn't hold very long, would it? Okay, so there's certain thing to be noted whenever you're looking at the actual trend line, if it's sloped too much or not enough. And in this particular case, it was not enough. That calls for a bull trap, and I said I think this is about to break to the downside. So let's look at today's activity. Okay, here's a quick look at today's close, the Friday, February the 5th, 2016 NASDAQ chart. Same chart, only we have one more day added to the candlestick pattern. You can see that we have now closed below this upper trend line, confirming that as a break to the downside or a breakout for bulls. I mean, it's a very, not bulls, bears, very bearish condition. Bears would be jumping on this, looking for us to continue to go lower and pick up speed as well as we took out this low here. So as we continue to go lower, we'll take out this low and this one, like I said over here, and then we'll go much lower, much faster. You could see something like this happen. Okay, as soon as you broke to the downside, you took out that low. Okay, and once that happened, it starts to pick up speed. You can see the exact same thing over here. So next week and the rest of February could actually look much more like this condition here than this condition here. Quick glance now at the S&P 500 large cap index. You can see the same basic overall break of that trend line. So we moved lower here, and now we're going to be testing at this previous low here. Well, we've already talked about this. When this happened here, even though we got the hammer candlestick formation, we've got this long wick or needle out of the bottom there. I told you guys that was typically, that does show up before you break. It's like a warning saying, hey, we've pierced it once, next time we come down here we're going to break through it. So look for this to come down through and keep pulling lower. Also look at your oscillating indicators. They're all in the position where you expect to see a nice move to the downside. So that's also confirming it. Last but not least, let's have a look at the Dow Jones Industrial Average. You can see the same basic overall trend trend line here, but you have not actually broken through yet. You're not closed below that trend line here, and so this is something I look for to happen next week. Also note overbought condition on the oscillator, and then I would be looking at all these charts and say, okay, this is in fact a bearish condition. We have the 50 period moving average crossing below the 200 period moving average, and we're showing that bears are actually stronger than bulls. That's why every time the market would set up for the bounce, it would fail again and again and again. I try to get in on this side here and trade some individual companies. They made a move to the upside for a couple of days and then broke down. So again, I'm now very, very bearish in these markets. I would say For me personally, the only trades I've been looking to take are bearish short positions on, or you can buy puts or whatever, but I'm just going to do trading from the bearish perspective moving forward. Okay, God bless, take care, enjoy your weekend, and I'll see you all again in the next one.